Are you a small business owner or real estate investor making great money, but still feeling like Uncle Sam is your biggest business partner? You're not alone. Most profitable businesses are overpaying the IRS every single year. Why? Not because they're doing anything wrong. It's because they don't know the strategies that are already written into the tax code to help them save. In this video, I'm walking you through 7 powerful IRS-approved tax strategies that will help you keep more of what you earn legally and confidently. These are not loopholes. These are the same strategies high-income entrepreneurs, real estate investors, and family-run businesses have been using for years. Stick around until the end, because I'll also share the most common mistake we see that costs small businesses 5 to 6 figures annually. Let's jump right in. Strategy 1. Electing S-Corp status. If you're operating as a single-member LLC and reporting all your profit on Schedule C, you're likely paying way more in self-employment tax than necessary. Here's the move. Elect S-Corp status using Form 2553 or Form 8832. Once approved, you can split your income into a reasonable salary, which is subject to payroll tax and distributions, which are not. This one shift can reduce your self-employment tax by thousands. One of our clients, a digital marketing agency owner, had $130,000 in annual profit. Before the switch, they paid nearly $18,000 in self-employment tax. After becoming an S-Corp and structuring a $70,000 salary, they saved $11,400 in just 1 year. Pro tip, don't guess your salary. Use industry benchmarks and document everything. The IRS watches this closely. Strategy 2. Having a defined benefit plan and a solo 401k together. If you're over 50 with a strong business income, a defined benefit plan can allow you to contribute over $100,000 annually on top of your solo 401k. How does it work? Instead of a flat contribution, it calculates your ideal retirement benefit and then works backward to determine how much you can contribute each year. We worked with a solo CPA who contributed $162,000 in 1 year between a defined benefit plan and a solo 401k and saved $73,000 in federal taxes. This is one of the most powerful tools for high-income service businesses and professionals. Strategy 3. Making quarterly estimated taxes. A surprisingly common problem, business owners skipping quarterly tax payments. If you owe more than $1,000 in federal taxes for the year, the IRS expects you to pay in 4 installments: April, June, September, and January. Missing even one payment can lead to penalties and interest. A logistics company with consistent monthly revenue skipped Q2 and Q3 payments. When April came, they owed over $14,000, plus $2,100 in penalties. How did we help that company? We set up cash flow projections, automated their tax transfers, and aligned payments with their income. Spikes. Result? The following year, no penalties, smoother cash flow, and peace of mind. Here is strategy 4. Real estate entity structuring. If you're managing multiple properties in one LLC, or worse, under your name, you're risking more than just taxes. Here's what we see too often. 6 to 10 properties under one LLC, no separation of liability, and all income flowing through a single tax return. Here are some of the strategies that you can think of implementing. Form a series LLC to separate liability. Create an S-Corp for property management. Charge reasonable management fees between entities. Enable payroll plus retirement deductions. Here is the result for one investor. There were over $47,000 in tax savings and better protection across the board. Your real estate isn't just an asset, it's a business. Structure it like one. Strategy 5 is to do with tax-free healthcare with HRAs and HSAs. Healthcare costs are risky high, but they're also 100% deductible when structured right. Here's what you can do. Set up a Section 105 health reimbursement arrangement, HRA, if you're an S-Corp or family business. Pair it with a health savings account, HSA, if you have a high deductible plan. A family-owned restaurant spent over $18,000 a year on personal medical bills. With a properly structured HRA, we helped them deduct $12,500 tax-free in year 1 and covered their team as well. The HSA gave them a second layer of tax-free investing in healthcare dollars. Strategy note: these plans aren't just cost-saving, they're tools for employee retention too. Strategy 6. Claim the R&D tax credit. Don't ignore this because of the name. The R&D tax credit is not just for tech giants. If your company builds software, improves internal processes, develop new products or services, you might qualify, and we've helped. A SaaS firm gets $38,000 in credits, an HVAC installer gets $22,000 for an energy-efficient system, design a manufacturing shop gets $45,000 for process improvements. It's a dollar-for-dollar credit, not a deduction. That means a direct reduction of what you owe the IRS. Tip: documentation matters. Keep records of what your team is developing and testing. Strategy 7. Strategic bookkeeping. We say this often. Bookkeeping isn't just about data, it's about strategy. Example: an e-commerce business came to us using DIY software. It looked okay until we saw they logged $280,000 in ad spend as inventory. That one mistake caused them to overpay $102,000 in taxes. We fixed it by rebuilding the chart of accounts, reclassifying, Bookkeeping. Key expenses: filing an amended return, clean books, cleaner returns, better planning, and bigger savings. Now here's the one mistake we see across almost every business that walks through our door. They wait until tax season to plan. By April, you're not planning, you're reporting. The best tax savings come from proactive planning in Q3 and Q4, not when the year's over. If you're earning consistent revenue and want to implement any of these strategies the right way, let's talk. Head to Gavtax.com, book your free strategy consultation, and let's build your tax-efficient business plan together. Like, subscribe, and share this video with another business owner who's tired of overpaying.